Well, welcome everyone. Is everybody having a good time at the Hickory Women's Expo? Or maybe a little bit louder from the back, all right? So I'm one of the organizers, Kate Dillon, and I want to thank you so much for being here. Looking forward to this presentation here. It can be so challenging. I mean, purchasing a home in any market is certainly challenging, but in today's market, it's especially fickle. So it's wonderful. Today, Denise Shelton is here from Primus Mortgage, and she is Hickory's local preferred lender for residential mortgages. And she's lived in Western North Carolina her entire life and loves this area and the people here. Before being in the mortgage business, she had a career in supply chain management where she traveled all over the world and worked with people from many cultures. She loved meeting people, sourcing products, and negotiating deals, but when her grandchildren came along, she knew it was time for a change, and she needed a job that kept her closer to home and available to spend time with her family. So this is what led her to the mortgage business, and that was just perfect. So it is my pleasure to announce Denise Shelton. Come and join us here on the stage. Let's give her a hand.
Thanks, guys. I appreciate you coming in here today. First of all, at the end of the session, we are going to give away a Amazon gift card for $100 if you're here. So if you have not registered, make sure you go back and register. My husband's at the table back there, and he can get you registered before we draw. So today we're going to talk about home purchasing in today's market. So first, let's just start with the elephant that's in the room and talk about interest rates. Is anybody happy with where the interest rate is today? No. So let's just get that out of the way and say there is nobody in here today that could really do anything about the interest rate. We all know it's higher than we want it to be. So let's just not think about that right now, and let's say, okay, it is what it is. So let's talk about how we can work with the market as it is today. But in talking about interest rates, they have dropped significantly over the last few weeks. And you've probably heard some news where the feds are going to be meeting next month, and they're going to decide if they lower the rates again. If this happens, this is going to be huge to the housing market. And let's talk about why. First of all, home prices. Since COVID, we've seen a dramatic increase in home prices in this area. I know you've all seen it. And why is that? Well, one of the reasons is with COVID, we saw the ability to work from home dramatically increase. This gives employees the opportunity to live anywhere you want to and keep your job. And there has been a significant growth in this area since COVID. Catawba County's population is growing at a growth rate of about 0.9%. That's equal to 1,478 people per year, or about 4 people per day. The Catawba County area is growing. And if you've seen the studies, we've seen Hickory get called out as ranked one of the best cities in the United States to live in. We have everything here. The cost of living is low. We have 4 seasons. It's easy to access the mountains, the lakes, the oceans, so it's a great place to live. And now people have the option of living anywhere they want to. Move Buddha and U-Haul are companies that track the move-in and move-out rate of all states. And in 2024, South Carolina has moved to a solid #1 position for move-in ratio and searches for states to move to. And behind South Carolina is North Carolina in a solid 2nd position. So South Carolina and North Carolina have now surpassed Florida and Texas as places people want to move to. So then with the increase in people coming to this area, the demands for homes is increasing. So in the last few years, however, we saw a decrease in listings because as the interest rates rose, people didn't list their houses to sell. So it's kind of like economics 101. You have a high demand, low inventory, so you get an increase in the purchase price of the house. So that's what's happened. But one thing to note about home prices is they've really started to stabilize now. It's a sign that the market's starting to normalize in this area and settle down, more normal with the rest of the country. This year, we're seeing more and more houses come on the market. In June of 2024, there was a 25% increase in new listings. Now, the average sales price of a house in the Catawba Valley region now is $377,927. Pretty significant. Properties in this region stay on the market at an average of 34 days. So if you see something you like, you have to act fast. However, there's one thing to note. If this interest rate drops like they are anticipating it will over the next 4 weeks or so, the price of homes are going to go up. That's another reason to consider buying now. While the increase in home prices are going up and the higher interest rates, they've made an impact and really created a challenge. What's also happened is that most all homeowners have a dramatic increase in home equity. Right now, over 2/3 of homeowners have at least 50% equity in their house, and 29% of homeowners have more than 50% equity. Home equity is straight cash availability. You know, we complain a lot about the interest rates and home prices, but many people just got a whole lot richer due to the amount of the home equity they now have at their disposal. So if you're interested in determining how much equity you really have, the best way to do that is get a qualified real estate agent to walk you through what's called a professional equity assessment report of your home. And they can do that and give you an example of how much cash you have available in your home. So now our situation is this. Interest rates are dropping, and they may drop more in the next 4 weeks. Homeowners have a lot of equity. More listings are going to be coming on the market soon because home purchasing is looking more favorable. Home prices are stable right now, but they're going to increase when the interest rates go down. So it's a perfect storm to consider home purchasing right now. It's a buyer's market. Whether you're a first-time home buyer or looking to upgrade or downsize, now's the time to consider making the move. Now, what do you need to know before you purchase a home? Whether you're looking to purchase the first time or if you've purchased many homes in the past. When you're working with a lender, there's the 4 C's that a lender is going to look for. The first thing is capacity, and it's called the ability to repay. What they're looking at is your employment history and stability, your income history, and your debt-to-income ratio. In most cases, the lender is looking for 2 years of stable employment history, and that includes school, if you were in school full-time. However, there are some exceptions to that rule, so be sure to talk to a lender about that. And then debt-to-income ratio. Your total monthly payments on all your bills, including the new mortgage that you're considering, should be around no more than 45% of your total gross income. That's a general rule. That's all part of the first C, capacity. The second C is cash. It means what we call skin in the game. This means what funds do you have available for down payment? Do you have the ability to save money? Do you have what's called reserves, cash at the bank? But remember, there's a lot of down payment assistance programs, but that's the second thing lenders look at if you have cash availability. The third thing is credit, willingness to repay. They'll look at your credit, your payment history, your FICO score, if you have any significant derogatory events. And when Primus Mortgage takes your application, we do what's called a soft credit pull. And that will not hurt your credit. It just gives me your information so that I can calculate what you qualify for. So you have to be really careful when somebody's doing a hard credit pull. In our situation, we don't do that. So credit is the third. And the fourth is collateral, which is loan security. Looking at the property type, the property value, homeowner's insurance, and title policy, we want to make sure you're buying a good property. So capacity, cash, credit, and collateral. Now, That's a lot to remember, and it's a little bit scary and intimidating, but that's okay because you don't have to remember any of it. That's why the first step when considering purchasing a home is to get pre-approved with a trusted lender. So what should you look for in a lender? First of all, do you have direct access to your mortgage loan officer at any time? Do you trust your loan officer to communicate with you clearly and walk you through the entire process? And does your lender offer programs and rates and fees that fit your individual needs? And is your lender proven in the market? You need a trusted lender where you have access to your loan officer to answer your questions. And once you have a trusted lender, then they can start preparing you for a few things. Where do I stand right now financially? Am I ready to start looking to purchase? If you're not ready right now, when will I be, and what steps do I need to take to get there? If credit or debt to income ratio are an issue, you need to have a lender that can give you a plan and a goal of where you need to be and the steps to how to get there. And then if you are ready, then what is the purchase price range I could qualify for? What does my payment look like? How much money do I need? And what loan programs will you be working with? A lender needs to be able to explain to you the difference between a conventional loan, FHA loan, VA, USDA, and give you different scenarios and options that will affect your closing costs and your monthly payment. Anybody that wants to get with me after this session and set up a time to have those kind of conversations, we can do that. Then after you have a lender, your next step is to partner with an excellent realtor. You've probably heard a lot of news on the TV lately about the National Association of Realtors, the buyer agent fees. You need to find someone, a realtor, that can explain that to you. Things have changed with how we pay commissions to our realtors, and you need a realtor that is accessible, you feel comfortable with, and someone that can answer all your questions. So once you find a realtor, you're confident in them, then you connect them with your loan officer, and the three of you make a team and work together toward the same goals so that everything is up front. You have no surprises in the process. Then you go house shopping. If you've taken the steps with a lender and with a realtor before house shopping, you're an educated shopper. Nothing will be done on impulse, and you'll be fully informed before you ever step foot in the house. Never make an offer before running it by a lender or talking with your realtor, and make sure it's the best offer for you. And once you find the perfect home and you're under contract, then the loan process starts. So during the loan process, there are certain things that you cannot do. And if you're considering buying a home in the near future, be careful about these things. Do not change jobs. Do not become self-employed or quit your job. Don't make a major purchase. Don't buy a vehicle or a major purchase. Don't let anybody pull your credit, and don't use a credit card excessively. When you go to TJ Maxx and they ask you if you want 10% off on this order today, say no. Don't let them pull your credit. This will protect you from anything that may cause you to get denied for a mortgage after putting a contract in. And if you plan on doing any of those things in the near future, like job changes, have a discussion with your lender on the timing to determine if you'll still be able to purchase. Now let's talk about credit score. If you're tracking your credit score on credit apps, that's great. However, please know that when a mortgage lender pulls your credit, you may see a big difference between how the lender calculates your credit and how the app is reporting your credit score. Could be a big difference. So it's really important to partner with a lender first and understand what your mortgage FICO score is. And what does your score need to be to buy a home? There's different requirements for different programs, but as an example, at Primus Mortgage, the lowest your score can be to get a mortgage is 550. And to get an FHA loan, your score needs to be 580. For a conventional loan, you'll need to be up into the 700s. For down payment assistance programs, as a general rule, your score needs to be 640 for a stick-built house and 660 for a brand-new manufactured double-wide. No no down payment assistance on a used manufactured home or a single wide. Now, how much money will you need to purchase a house? The money that's going to come out of your pocket, first of all, is earnest money and due diligence. This is the money that you need to put your home, put the house you're buying under contract with the seller. And the amount varies. You'll determine what amount that is with your realtor. It could be anywhere from $1,000, $2,000, or more. It depends on the purchase price of the home and what the realtor feels like is best. After going under contract, you'll be at a due diligence period. During this period, you'll pay for any home inspections or pest inspections you want done, and you'll also pay for an appraisal. Appraisal can cost around $700. Now, if you're getting down payment assistance or seller-paid closing costs, remember that money comes at closing. So you will have to have some money up front that comes out of your pocket. Earnest money, due diligence, home inspections, and appraisal costs. This is the money that the buyer has to pay up front in the process. If you're not getting down payment assistance, the down payment amount, the minimum amount you can put down. On a conventional loan, if you're a first-time home buyer, it's 3%. If you're not, it's 5%. If you have a FHA loan, it's 3.5%. There are 100% financing if it's a USDA loan and a VA loan. And then there's closing costs, and they vary by lender, and you can walk with your lender through what all the closing costs are. Now, down payment assistance programs. There are many down payment assistance programs available. That comes at the end, and will go towards your down payment and your closing costs. These programs are available for first-time home buyers and non-first-time home buyers. There are programs that range anywhere from $15,000 of assistance to up to 25% of the purchase price of the home. And what you qualify for depends on your credit score and your income. So you'll work with your lender to see what's available for that. And a lot of the assistance programs and financing programs depend on the actual location of the property. So make sure you have a lender that you can text an address to before you go see it, so you'll know what options are available. There's some homes that happen to be sitting in a census tract where I can get you a lower interest rate because the Federal Reserve has determined that census tract as a place where they want to make financing more available. USDA depends, which is 100% loan with no down payment. It depends on where a home's located, if it's eligible. So there's a lot of programs available out there. So next, let's talk about refinancing real quick, because we talked about a lot of people have home equity right now, and you'd say, why would I want to consider refinancing right now? Interest rates are way too high. Well, there's a couple of reasons. If you have owned your home, then you probably have a lot of equity, and a cash out refinance option can give you immediate cash. And what could you do with that cash? Well, you could pay off high interest rate debt. Sometimes it might be worth it to have a little bit higher interest rate mortgage if you can pay off high interest rate credit cards or student loans. So we can run that scenario for you, let you know if it pay off. Or you could use the money, and a lot of people are doing this right now. They're using the equity in their home to purchase a new home or an investment property, a rental property. You can put in an offer without making it contingent on selling your home. There's options to do that, or you can buy the investment property or second home. Now, at Premise Mortgage, we have a program that's called the Bounce Back Program. That means if you buy a home right now, after making 6 payments on your mortgage, you can refinance. So we talked about how home prices are stable right now, but if the interest rate drops, the home price goes up. Well, if you buy now when the prices are lower, after making 6 payments, we will refinance you to a lower interest rate if it drops, with no lender fees, and we'll give you a credit for your appraisal up to $725. So it's a win-win. You buy when the prices are lower right now, and you refinance soon to the lower rate. Home equity puts you in a great position too for real estate investing. We have a lot of programs for real estate investors, and I would love to talk to anybody about that. So that's really all I had right now, but I did want to open it up. If you have any specific questions, I have Taylor with me. She can help out too. So you've got two loan officers at your here to answer any questions you might have. Does anybody have a specific question? Yeah.
Any questions?
Do you have to have a specific address for those locations of the homes that qualify for those programs? Or can you tell us an area? Could I say, oh, Bethlehem, Alexander County, Longview? Can you do that and say, yeah, that area qualifies for this program?
There are,
USDA.
yeah, we can do that. I could do a screenshot of a map of an area that would kind of show you the area where either I have lower rate financing or USDA eligibility. Yep, sure can.
There's another program that we can, the one she was talking about where you get a lower rate. It's a little bit harder in that sense as far as map wise. A lot of times it's like this street will have a lower interest rate, whereas this one won't. But that's why we always, yeah. And we can give you that street once you know you're going to be in that area, but that's a little bit more specific. But USDA is kind of broader. You get a big map.
I mean, if you don't have a house already picked out and you want to look in an area,
Mhm.
that's where you want to go. You want
Yep.
the best bang for your money.
Yeah.
So you need to talk to you and then get
Yep.
that information, then go out and look around.
Yeah.
Absolutely, we can do that.
And then pre-approved,
Yes.
how long?
Pre-approval, how it works with us too, before you go out and look, we actually do what's called a true pre-approval. A lot of lenders, they do what's called a pre-qualification, which is just an initial glance at an application and a credit score, and they say, okay, you should be able to do this. What we do that's different, we do a true pre-approval, which means I verify your income. I actually run your numbers through underwriting before I give you pre-approval. So we pretty much know before you go house shopping if you're going to get approved for that mortgage or not, because we've run you through initial underwriting. So you can feel very confident when you're putting in an offer that you're going to get approved unless something strange comes up in the process.
So when you do the pre-approval, when you, instead of saying yes or no, you say, you're approved, this is your house amount you're approved for, and this is your payment amount you're approved for.
Absolutely.
That's the way it works.
Yeah. And
Absolutely.
we'll give you your cash to close, all of it. And if you know of a range you want to be at, we'll say, well, let's look at the highest range so you know your highest payment will be this. Another good thing about pre-approval is if you're even looking to buy it within a year. I have a lot of people that are like, well, I want to buy next, at the beginning, in the spring. We've already got them pre-approved, and we've already looked at all their income and stuff and their credit, because we didn't mention this, but we do free credit rescores. So basically in mortgages, you have certain brackets of credit scores you're in. So if you're in a bracket or you're close and we're like, gosh, if you go up one more bracket, your rate's going to drop by half. Well, we can tell you exactly what you need to do, and if you do those steps, we will rescore your credit for free, and then you'll be in a much better position at that time in spring or whenever you're looking to buy, and you'll have a much better rate. So,
Half a percent.
oh yeah, it can,
Half a percent is a lot of money over 30 years.
Oh, yeah. And what we do on the pre-approval, what Taylor was saying, is we give you the max that you can be approved for. Let's say I say to you, you could do it, you can buy a $250,000 house. But let's say you find one for $220,000. I'm not going to give you a pre-approval letter for $250,000 to take with your offer.
I don't want the agents or the
The
sellers
seller.
to know you qualify for so much more, because then they're gonna try to negotiate that.
Exactly. So we wouldn't give you an actual letter until you're ready to put in an offer, and we'll give you a letter that matches the exact offer that you're putting in.
Yeah.
Yeah. And you can feel confident in that letter, because you have to be really, really careful with people that just pre-approve you at a glance.
Another thing we do, she said we have 24/7 access to our team. We give out our personal cell phone numbers. We truly value like relationship in this, and we want like everybody to feel super comfortable and be able to ask all the questions. We're not super salesy, so we're not gonna be like, you know, if this is a better, if you have a better option elsewhere, like, we're gonna talk you through and help you. We always say that mortgage is our ministry, so we truly just wanna help people. So you can feel confident that you're working with people that truly value your time and your money and the situation specific. We deal with a lot of sensitive clients, so, we're definitely here.
Denise, which is my wife, by the way. About tell them the most down payment assistance you've gotten for one of your clients.
Well, I've got one loan I'm working on right now that we got $95,000 for her, and then one that just closed was a very desperate situation. Her home had burned down, and the Red Cross was housing her, and she was sleeping on people's couches. But anyway, we got her $72,500 and moved her into a new construction home here in Hickory that's part of Hickory's affordable housing opportunity. So those are extreme situations because your income has to be very, very low to support that level of down payment assistance. But the point is, there are so many programs out there that are not, that people just don't know about, that are available. You know, there's a group called the U-to-4 Consortium that offers 20% of the purchase price of the home up to $30,000 if you fall under certain income brackets and debt-to-income ratios. And that's for Burke, Catawba, Caldwell, and Alexander counties. A lot of people don't know about those programs.
Is there any more questions?
All right, then it's time for the drawing.
We are
Thank you.
gonna, I think some people are missing that were in there, so forgive us if we go through a couple of names before. Absolutely,
Yeah, go register right quick, for sure. We'll wait on you.
Yeah.
Yeah.
Yep. Lowest income? We've worked with people on disability, just disability that's been very low, $1,500. I've gotten somebody approved for a house. You're talking about their monthly income? Yeah, we've gotten somebody, 1,500. The thing about premise specifically is we can gross up income. This sounds crazy, you know, explaining it to the average person, but if you're on Social Security or disability, or even if you get like, adoption income or foster income, we can actually gross that up. So the government gives you, let's say, $1,500. We can go up, what is it?
25%.
25% of that and count that towards your income, which helps your rate. So there's a lot of. Absolutely, yes, absolutely. Yeah, so your payment will be lower in those instances for sure.
It helps you get more down payment assistance so that you can get the lower payment.
Yeah.
Well, somebody that, say they went to school for 2 years, they were out of work for 6 months till they got a job, and then is that considered time?
Yep. We can count school as employment history. The only time that would be an issue is if they went into like self-employment or 1099 work. That gets a little iffy. We would have to use a history instead of like the future. But if you're W-2 salary, hourly, then you're completely fine in that situation. There can even be some employment gaps, and we would just have to have an explanation. Like obviously they were looking for a job after school, stuff like that. But all that entails is signing a letter of explanation. So yeah, no big deal there.
Yeah,
$0.
nothing.
Yeah.
It's free.
And we do soft pulls, so our company pays an additional fee to where we can do soft pulls, and we really like that because we are very big on getting pre-approvals, and we would hate to like do a hard pull on somebody's credit and then them not be ready for 6 months and credit expires, so we'd have to pull it again and again. So we really like the soft pull option, especially for people we're working with on like credit rescores. I really like to do the soft pulls and just get them in a really good position, because like I said, 50 points in a credit score can get you a point lower, sometimes more in a rate. And so we're really looking at all options, like, hey, you could pay down this credit card by $300 and your interest rate goes down by a quarter.
That's
So
big
we're,
money.
we're looking at
Big
that.
money.
You wanna draw?
I'll draw, and I'll hand it to y'all, y'all in the limelight.
I don't know if you're gonna go to second.
I'm gonna close my eyes.
You probably can't see or read.
Okay, hopefully this person's here.
If they're not, we can move on.
Is Brenda Bowman.
Ah! Congratulations.
We'll, email you the gift cards.